Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to do our daily technical analysis update of commodities. We're going to work our way through the dollar, yields, precious metals, and commodities and ETFs, at least the ones that I follow. I'm going to give you my financial opinion across the board. If you guys need any help with anything, check out finding-value.com, become a platinum member, and join our community. Let's dive in. Let's take a look and see what's going on in the commodity financial market world. So we've got the DXY here. The DXY is basically an indication of the strength of a currency relative to other currencies. Currencies generally strengthen with monetary tightness. So we're down with the dollar today, and we've gotten some monetary tightness in our currency or our American bonds. And other areas of the world, their currencies and their monetary tightness is getting tighter a lot faster. So they're basically catching up to the dollar. So the dollar has been moving sideways, even though both currencies have been tightening monetary wise. So the US 2-year, we continue to move higher. And it's interesting because if you kind of look, you can kind of see we've got a neckline here. Was this going to be a shoulder head shoulder kind of deal or something like that? But we continue to move higher here in the short term. It's a lot of small candlesticks as well. So we just keep grinding higher and higher and higher. And one of the drivers of inflation is new home builds, the housing market. I think Powell's trying to slow the housing market down, so he continues to raise rates, but rates can only do so much if you're coming into the thick of a demographic and a gigantic supply-demand imbalance in real estate. So it can slow it down, but I don't know if it can stop it. And rates moving higher with the real estate market, it might cause problems in other sectors that are non-real estate related. So we could get a recession. We could have this go down. Those are all things that could possibly happen. But it doesn't mean that it will happen, and it doesn't mean that they can lower rates if they're trying to stop and slow down inflation. They're going to have to make sacrifices. They're going to have to, for problems, if they're in a problem, you have solutions. If you're in a predicament, you have outcomes. They are in a predicament. They have to handle outcomes. Outcomes of increasing interest rates to handle inflation, but having the deficits run away with you with interest payments. If they lower those interest rates, you don't have a problem with the debt payments, but you're going to have a problem with inflation. So what they're trying to do is they're trying to balance a whole bunch of different things that I don't think they can have a rosy outlook based off of whatever decision they make. There is no easy path, so to speak. So they can raise rates, or the market's going to force them to raise rates just flat out. Otherwise, they're going to have to print a bunch of money, buy a bunch of bonds, and do QE to hold interest rates down. So the natural tendency in this type of environment is for rates to go higher, especially with the amount of bonds that they have to release. So higher US 2-year, higher 10-year today, and this could break to the upside at some point, and then higher 30-year. The 30-year is already broken to the upside, and that looks like it could cruise on up with a slow grind. The TYX-TNX ratio, it's still inverting lower. That puts pressure on precious metals. That's why precious metals have been moving sideways to slightly lower, is because the curve continues to invert. We've got TLT. This has been moving sideways, just bouncing sideways over the past year or so. Almost, it's going to be about a year almost. And we're consolidating. Gold down a little bit, down $9. We're down to 19.13. We're at that support level. Will that support level hold? And then you've got all the people, oh, we're going to come back down. We're going to go back up. We'll see, guys. We'll see. Just relax. I am in the camp that long term, we are going way higher in commodities in general and gold and silver and all these other things because of the inflation that's going to come from the demographic in housing and in peak spending years. Silver up 0.44%, but if I were to look at this chart, I would say this is going to go down. We've got larger selling pressure. This bounce is weak. We've got a nice little wick at the top that, to me, looks like we could go lower in the short term for silver. Platinum, also, I would wait for this. We've got lots of momentum heading lower. There's no real sustained bounce here. I would be just waiting to see where it ends up. But I still think platinum is an excellent long-term investment. I've thought that since 2019 back here. In the corner, I was like, man, that's really low. Now, if you take a very long-term approach to this, I think we are going higher than 2,200. We're going way up into the 4,000, 5,000, maybe even way up there, depending on what the blow-off top looks like. That is what the vision is. Now you just have to wait through this volatility in the short term. XAU to gold ratio still hasn't broken its downtrend yet. We've got a little ways to go. Looks like it's trying to consolidate sideways today. The ratio, that is. CRB index still just moving up and down, going sideways. So that's consolidating as well. The CRB to S&P 500, we're still in a downtrend there for this ratio. Eventually, this ratio is going to bottom and turn to the upside. We are going to see an outperformance of commodities in relationship to the S&P 500. And that has always happened during a real estate expansionary phase in an inflationary period. And all of those alignments in the market conditions are there today. GDX down a little bit. But we were down with gold. GDX also down with gold, and SILJ down with gold. And we're in these patterns, consolidating. It's going to take some time. Be patient. Crude oil down 2.26%. We're back to that support level that we've been bouncing off. We're around $68. Keep in mind, though, let's look at the equities and see what's happening with the equities. Natural gas also slightly lower, but it's hanging in there. So XOP was up 0.54% today, breaking out of its downtrend line. So we've got XOP up at the same time that crude oil is down 2.26%. Could we see a move on up in the equities? Yes. Could we see a move up in oil? Yes. I don't know if a recession is going to come. I don't think anyone knows that. They can look at a bunch of data, but generally speaking, when you got the housing starts moving upward and you've got new home sales going up, I just don't find how we're in a recession. I just don't. I don't believe it. Put it that way. It's too strong to be too weak. But oil, I think people are positioning perhaps in oil and oil services, and eventually we'll get a big move up to the upside along with the real estate starts. OIH also moving higher. That's looking a little bit better in the short term. I don't invest for the short term. I invest for the long term. I think this looks fantastic for a move way higher, and it's going to blow people's minds when all this crap starts to move. I'll just say it that way. Sprott Physical Uranium Trust, we're still below that 1815 level that we haven't closed above yet, but it looks like it's consolidating, resting for a potential move to the upside eventually. And we could even still do a little retest down to 1660. Uranium, looking like it's doing a full retest here. Just give it some time. And URNJ also doing what URNM's doing. Patience, guys, patience. TAN up a little bit, 1.15%. It's bouncing all around in here. Big long term. Will this go on up just like the way it fell? It's possible. What's going to drive that? It's going to be subsidies and government spending. TAN and I don't think solar and wind can survive by itself. Fossil fuels crush them. They are not, no matter how efficient you get, you cannot overcome the intermittency on a wide adoption for solar and wind. They're too intermittent. It is dependent on weather, and we cannot control the weather. The best way you can do it is let Mother Nature gather these things up, put them in deposits, take that high energy return on energy invested deposit or area or fuel source, whatever, and use it. It's that simple. And they make money when they do that. These guys lose money. COPX, copper miners, still we're just bouncing sideways in this channel. We've got lithium that looks a little bit better. It looks like we've got that full retest. This does look like we could continue higher for lithium. You can see a move on up. So that's what I'm looking for. REMX, same thing. We could see a move on higher with REMX at some point here at any second where we break and start moving on up. The S&P 500 up 1.15%. Quite surprising how strong it was today. Are we going to top here? Are we going to top somewhere up here? I don't know. We'll find out. I do think a top will eventually come. We've got NASDAQ up today, looking strong. We've got emerging markets up 1.02%. Again, if we see weaker dollar, weaker yields, this will just light it up. Emerging markets and the strength of their currencies also matter. XHB rolling higher, massively up 2.87%. New home sales absolutely crushing it. Looks like the housing bears could be wrong. I'll leave it open. We'll see where the new home sales go. We'll see where the new housing starts go. I'll leave it open for, if we get a good couple of strong months, we know that the housing market is back and it's killing it. A lot of these people on YouTube, they have been wrong. Oh, interest rates going up is going to kill. It's not going to kill the market until the demographic gets through, guys. It's that simple. It's built off of supply and demand and peak spending years of that age demographic. The interest rates are a function or a condition. It's an outcome of the demographic coming through those years. It is not a driver of it. It is a lagging indicator of it. So XHB is killing it. We've got Moo also heading a little bit higher, but again, guys, these are all, if you're just patient, this general location is a good spot to look. If you're patient, you just accumulate on this breakout here. It's going to be a breakout, a retest, and then right there is where I'd be looking. Copper down 0.21%. We're right at that support level. If we were getting a big recession, copper would be just diving. Now, we might have already gone through it. And everyone else says, oh, yeah, we got this huge recession. All the numbers are lagging indicators. We may have already gone through the worst. And no one is going to know until it's behind us. So we have the housing market starting to kick back up. That generally indicates that the worst is behind us and that we could see things start to turn up here. But we'll see. Iron ore also, I think, looks quite strong. We've got a breakout here of the falling wedge, kind of a higher low. And then if we break this guy, we're in a new uptrend. So that looks good. Nickel down 0.05%. Could that head a little bit lower? It could. Looks like we could head a little bit lower there. Aluminum bouncing off its support level. Nice strong bounce today. We'll see if that continues tomorrow. Baltic Dry Index. I do think this will head up on up. If we're in the expansion phase, if we have more people demanding more stuff around the world, you know what that means? We have to ship more stuff around the world. We have to ship a lot more. Newcastle coal, just let it base out. It's going to take some time, maybe even up 6 months to a year. Let it base out, and then we're going to rip it. Ethereum, up a little bit today. This is just right underneath its resistance line here. Wait for a break. You should see a big, strong buying pressure day on the break. We might have one last return move, and then a rip higher potentially. Bitcoin already had that rip higher here. There's the breakout, and it's consolidating in some sort of flag pattern. So that actually looks quite good for Bitcoin. But that's what I've got for today, guys. And I'm a hybrid, guys. I'm a hardcore hybrid. I use technical analysis. Yeah, it looks good. A lot of the times you kind of just wait for things to develop. It consolidates, it moves sideways for a long time. That's just kind of how the markets work. And then all of a sudden, you get these big pressures that build up, basically coming to the tip of a pattern of something like that. Then the market decides where it wants to go, and then breaks to the upside. Why do I think it's going to break to the upside? Valuations, the way that these chart patterns look, and the expansion phase of real estate. They all align in history. I can't name a gigantic commodity bull market that has occurred without the real estate market going up and that demographic. It hasn't. We haven't had a big bull market in it. So all of them are always in alignment. That alignment is right now, and that's what I'm looking for, is a commodity bull market until the housing market rolls over, comes back down with a bunch of inventory. We go into a hyper supply phase. So all these guys or girls, whoever, that are saying that we're going to go into this gigantic recession, and we can have a recession. It is possible. I'm not saying it can't happen. We had it in 2000, 2001. A recession like that could happen. But I don't think it's going to be, there are some things that are different between then and now. We have a stronger demographic. We've got stronger imbalances in the real estate market, the housing market. And those imbalances are going to manifest themselves with more homes being built. That when new homes are being built and they're going up, we've never had a recession during that time frame. So if I were to put a bet on it, if housing starts to go up and we continue on up, I don't think we're going to have a recession. I think it's people getting worried over something, and I think it's people that are looking at it from the last 40-year paradigm in a declining interest rate environment with a declining demographic. What's coming up is an increasing demographic coming into home buying years, coming into peak spending years, which is going to increase demand for a lot of things and increase the credit expansion in the system. So the M2 money supply came back down. That could have been related to a bunch of things that the Federal Reserve was doing, which they didn't do in history. So it's giving a lot of weird signals in the markets as well. It's getting harder to look at the indicators and say, yeah, this is for surely going to happen or not. But that's what I've got for today, guys. Thumb up for the content, subscribe to the channel, and we'll catch you guys later. This is Finding Value.